Welcome to MSME Knowledge and Education. Today, we want to take you through the National Stock Exchange trading platforms. As of now, we have a main board trading platform where large number of companies including Reliance, Tata Motors, HDFC are listed. We have an emerge trading platform where SME companies, that is an SME platform, and a new trading platform named institutional trading platform has begun operations. The emerge ITP platform, that is emerge institutional trading platform, is for startups and SMEs which seek listing without an initial public offer. This trading platform has been specially designed and launched for the startup and SMEs, the companies where new generation entrepreneurs bringing in technological, the web portal and other new businesses which needs equity funding from venture capitalist, PE, angel funds. This trading platform is one of the international trading platforms that is available around the world. Let me take you through the eligibility criteria for the companies who want to get listed on an ITP platform. There are 5 conditions for a company to comply before becoming eligible for a ITP listing. The first one is audited financial statements for 1 year. The second one is incorporation date less than 10 years. That is, a company should be incorporated after, say, August 2004 to get eligible for this platform. The revenue or the turnover should be less than 100 crores. The paid up capital should be less than 25 crores. The equity investor, now the 5th condition has an alternative. The first one being equity investor having an equity investment of greater than 50 lakh. This equity investor can be a venture capital, an angel group, a qualified institutional QIB, a merchant banker of alternate investment fund approved investors, or the 5th condition is having an or it is having a scheduled bank funding for greater than 3 years. The company has to comply all these 5 conditions to be eligible for NSE ITP listing. Why a company should get listed on emerge ITP platform? It gets the status of an NSE listed company without going for an initial public offer, that is an IPO. No IPO, in spite of the fact that the company gets a listing on the National Stock Exchange. No merchant banker. Since there is no IPO, there is no merchant banker, no prospectus, and even there is no SEBI approval required to become an emerge ITP listed company. No underwriting, no market making, no minimum shareholders. If you have a minimum of 7 shareholders in your limited company, you can get directly listed without any criteria for minimum shareholders. No dilution in promoters holding. Since there is no IPO, the compulsory dilution of 25% on a main board or an SME board is not applicable to emerge ITP platform. The entire holding can be with a group of 7 people and that can be directly listed. So there is no practical dilution in the promoters holding. No post-issue quarterly compliances. These compliances of financial reporting, which are quarterly in case of the main board or an SME platform, is on a half-yearly basis in emerge ITP platform. No ICDR guidelines and takeover code. This model does not attract the takeover code nor the ICDR guidelines. Under the takeover code mechanism at the main board listing, a person who is taking over a listed company can take maximum up to 25% of the shares. The balance he has to go for an offer to the public. In this case of an emerge ITP listed company, no takeover guidelines is applicable. and the promoter can take up to maximum 80% of the total listed equity on the eMerge ITP platform through the trading platform. No major cost of listing. Since there is no IPO, no merchant banker, no underwriting, the cost is very minimum. The initial listing fees of the exchange is 25,000 and the annual fees ranges from 20,000 to 40,000. No income tax on long-term capital gain. Just like any other listed company on the main board, the eMerge ITP platform, the STT, the security transaction tax is applicable, and thereby all long-term capital gains arising out of sale of shares of eMerge ITP companies are not liable to any income tax. No restriction on private placement and preferential issues. Just like main board, even ITP companies can come for private placement or preferential issues, and there are no restrictions on any of these issues. No cash outflow for merger, acquisition and ESOP. This is one of the benefit of an eMerge ITP platform. The equity capital of a limited company becomes a currency, and when you acquire a company through merger or acquisition, you are not required to pay any cash outflow. You can give your listed shares. The employees can be also retained through ESOP, that can be without any cash outflow. So to sum up, why a company should list on eMerge ITP: there is no initial offer, IPO, no merchant bankers, no prospectus, no SEBI approval, no underwriters, no market making, no minimum shareholders, no dilution in promoter holding, no post-issue quarterly compliances, no ICDR guidelines and takeover code, no major cost of listing, no income tax, the STT benefit is available, no restrictions on private placement or preferential issues. Let's see what are the benefits of eMerge ITP listing for the company. The company is having high visibility and creditability. Once it is listed on an NSE platform, ITP platform, it will be called an NSE listed company. It will enjoy public fame. The acceptance level will be on a higher side. The creditability of the company will go up, and definitely investor participation will improve. Lesser dilution. Promoter of growing companies can dilute a very small stake to get listed on an ITP platform. The equity can be given to informed investors like venture capital, PE, angel, institution and FDI. As I explained earlier, the stock becomes currency for ESOP mergers and acquisitions. Setting the stage. If the company is planning a IPO on the main platform, this can be a stepping stone where a company prepares for wide fund raising in future. The visibility improves, the risk investors participate, the corporate governance systems come into the picture, and the internal control improves a lot, leading a path for the main board listing in future. Let us see the benefits for an investor. The investor gets exit and liquidity, unlocking of shareholders' wealth, exit and liquidity for venture capitalists, PE, risk investors. Since there are a large number of income tax concessions, the exit and liquidity becomes lucrative. Better return. Exit from listed company attract only security transaction tax instead of capital gain tax. Investment opportunity. Listing provides an opportunity to invest in high growth potential companies with diverse portfolio, business strategy and sectors. Easier monitoring. The benefit of disclosure and compliance required on a regulated platform facilitate the investors to see the latest results, the latest news, the latest offerings. The listing process is very simple. In the first stage, the company has to prepare an information memorandum. Then exchange puts the same information memorandum on its website for public comments for 21 days. And then after 21 days, it issues an in-principle approval letter. The company securities are listed once they become dematerialized, and exchange gives the final approval for the listing. The entire process is transparent, efficient and credible. Let us understand how a company can exit from eMerge ITP. The startup and SME listing on ITP are expected to grow and mature and need to raise capital on other platform for which they may exit ITP in future. The exit process is very simple. The company can just pass a voluntary go opt for a voluntary exit through passing a special resolution and seeking stock exchange approval. There is one more criteria for growth. Once the company reaches a particular milestone, it has to exit from ITP. The maximum period for which a company can list on ITP is 10 years. The company has to exit from ITP once the paid up capital is greater than 25 crores or the revenue is greater than 300 crores or the entire market cap of the company exceeds 500 crores. Thank you.